Welcome to The Explainer. Today, we are unpacking a highly probable, frankly chilling economic scenario regarding the South Korean market, and it's been entirely generated by artificial intelligence. Now, if you look at the headlines, everything seems great, right? Record-breaking exports, stock market highs, but underneath all that glittering surface, there is a ticking time bomb. So, let's break down the data, the structural vulnerabilities, and exactly why this AI model is flashing bright red warning signs.
Okay, let's dive right into this. The core premise of our analysis today isn't just some pessimistic guess. We are looking at an advanced, AI-driven predictive model that analyzed current market data, global supply chains, and technological trends. And its conclusion? A 90% probability of a severe economic crisis right around the corner. 90%! It's a massive wake-up call that we absolutely have to look past the superficial numbers and examine the foundational math that's actually driving the economy.
Which brings us to Section 1, the illusion of prosperity. Macro versus micro.
To really understand why the AI is so incredibly alarmed here, we need to put on our economist hat and look at the absurd structural risk hiding right behind those flashy macro indicators. Just two semiconductor giants, Samsung and SK Hynix, make up over 52% of the entire Kospi market cap. I mean, more than half. So when you hear that the South Korean stock index is surging, it's a total illusion. The overall health of the country isn't actually booming. What's happening is that two massive tech conglomerates are single-handedly dragging the entire index upward. From an economist's perspective, this level of extreme concentration is a fatal vulnerability. The entire nation's financial stability rests on a single point of failure.
And this brilliantly illustrates what we call the K-shaped reality. We're essentially looking at two wildly divergent trajectories happening at the exact same time. On the upper arm of that K, you've got this record-high index driven by soaring semiconductor exports. But look at the bottom arm. The domestic market and local businesses are completely suffocating. If you walk down the street, you see empty storefronts, paralyzed traditional manufacturing. The average citizen just isn't feeling this supposed economic boom because the wealth isn't trickling down. It's entirely trapped at the very top of that K curve.
Let's dig deeper into this in Section 2, the structural flaw, an economist's warning.
The absolute crucial point here is that this isn't a booming, healthy economy. It's practically a monopoly. Over 80% of listed stocks in South Korea are either completely stagnant or actively falling. Global capital is pouring into the country, sure, but it's totally ignoring domestic businesses. It is solely chasing the semiconductor hype. Your traditional foundational industries, things like retail, chemicals, steel, they are being entirely starved of cash. When 80% of your economic ecosystem is basically withering away in the shadow of a single booming sector, you don't have an economy. You have a house of cards just waiting for a strong breeze.
So what provides that breeze? Section 3, the core trigger, the downfall of the AI bubble.
To understand this coming crash, we really must strip away the illusion of artificial general intelligence. The market has poured absolute trillions into the belief that AI is becoming this godlike superintelligence. But in reality, current AI is fundamentally a probabilistic calculator. It's basically a highly advanced autocomplete. It mathematically guesses the next likely word based on human data. It doesn't actually comprehend what it's saying. It lacks true reasoning. It's entirely bound by the limits of the human data it was trained on. Meaning, this dream of an omnipotent, self-improving superbrain that justifies endless, infinite semiconductor spending is frankly a fantasy.
Furthermore, AI development is slamming face first into a brick wall known as the law of diminishing returns. Big tech companies are spending exponentially more money on server farms and energy, but the AI models, they're only getting marginally better. They still suffer from hallucination errors, where they literally make up facts with absolute confidence. Because they can't cross that threshold from a helpful tool to an infallible genius, AI is settling into being a cost-effective assistant for repetitive tasks. It is not a revolutionary superintelligence, and if it's just a regular software tool, it doesn't justify infinite multi-trillion-dollar hardware investments.
Let's see how this all plays out in Section 4, the timeline of ruin.
This timeline shows exactly when those dominoes start to fall. Right now, moving into 2026, we are at the absolute peak of the AI and semiconductor bubble. But the AI model predicts a really harsh reality check by early 2027, where global big tech abruptly scales back their orders. And by late 2027, that corporate pullback translates directly into mass bankruptcies for small and medium enterprises and everyday households. The speed of this predicted collapse is honestly staggering.
So, you might be wondering why early 2027? Well, because that is when the grace period ends. Big tech companies like Microsoft and Google have spent billions building these massive AI infrastructures. And by early 2027, their shareholders are going to demand some intense return on investment.
When they realize AI isn't magically generating the trillions they promised, they will instantly slash costs. They're going to stop buying South Korea's hyper-expensive high-bandwidth memory chips, those premium HBMs, and pivot heavily towards cheaper, open-source general processors. That infinite demand for Korean chips, it simply vanishes overnight.
And what happens then? Section 5, the real economic domino effect.
When those chip orders vanish, the ripple effects are going to crush the average citizen. The sequence of events is highly predictable here. First, semiconductor exports plummet, crashing chip prices. And because those chips make up over 50% of the market, foreign capital initiates a massive bank run, fleeing the KOSPI. This rapid exit destroys the value of the South Korean won, causing a massive exchange rate spike. Ultimately, importing things like energy and food becomes astronomically expensive. Household inflation surges, forcing average families and local small businesses into mass bankruptcy. This is exactly how a tech bubble bursts directly into your living room.
And to make matters worse, South Korea won't even have a safety net. The government's tax revenue is heavily dependent on the corporate profits of those very same tech giants. So when Samsung and SK Hynix see their profits evaporate, national tax revenue collapses right alongside them. This leaves the government entirely paralyzed. They won't have the fiscal power to issue stimulus checks or bail out the suffering middle class.
So knowing this AI analyzed trajectory is headed our way, let's talk about Section 6, the asset defense strategy.
How do you actually protect your wealth? Well, there is one crucial number you need to remember right now. 1. We have exactly 1 year left to execute an exit strategy. The only reason this bubble hasn't popped yet is due to legally binding purchasing contracts that big tech simply hasn't escaped yet, but those expire. You have a narrow 1 year window to act before the market fully realizes the bubble is popped and the panic selling begins.
Your concrete defense strategy within this exact 1 year window is to aggressively pivot your capital into these 3 proven safe haven assets. First, US dollars. As we just discussed, the local currency is predicted to collapse. Holding dollars is your ultimate hedge to maintain your purchasing power. Second, physical gold. It is the historical anchor during periods of extreme market volatility and inflation. And third, U.S. Treasuries, which provide a secure yield backed by the world's reserve currency while the domestic stock market crashes. This is your survival triad.
The critical takeaway here for all of us is discipline. Please, do not let the illusion of a booming stock market trick you into complacency. The record highs you are seeing on the news right now, they are the final gasps of a highly concentrated, fundamentally flawed system. You absolutely must use this brief period of calm to completely fortify your financial position. Build your financial mattress right now, today, while this window of opportunity is still open. Because I promise you, once the big players start moving their money, it's going to be way too late for the retail investor to get out unscathed.
I'll leave you with this final thought from our AI-driven explainer today. We've looked at the data, the structural flaws, the actual physical limits of AI, and this inevitable timeline. Knowing there is a 90% probability of this K-shaped economic crash becoming a reality, I want you to look closely at your own portfolio. Are your assets truly safe right now? Don't wait for the dominoes to start falling. Take control of your financial future today. Thanks for joining me, and we'll see you in the next one.